Are you looking for a home loan with little to no money down? First time home buyer or second or third time buyer? What are your options? Well, Tracy's here to tell you we've got one: rural development financing.
Yeah, so rural development are also known as USDA RD loans. These are loans that provide 100% financing. So provided your debt to income ratio qualifies for 100% financing, you may not have to put any money down at all. It also comes with low monthly mortgage insurance. So anytime you buy a house and you don't put 20% down on conventional FHA, you're going to have mortgage insurance. So in rural development, what's great and unique is after every 12 months of payments, the mortgage insurance gets lower. So it just slowly dwindles over the life of the loan.
That's pretty cool. So this one isn't necessarily one that qualifies for everyone. So there are some catches to that. So what does that look like?
Right. So you have to buy in a designated rural development area. In other words, you can't buy a home using RD in the middle of Lafayette city limits. You can buy outskirts. So think Karen Crow, Youngsville, Dusson, Broussard areas.
Scott, and even there are some parts of Lafayette that are outside. It's going to be unincorporated for the most part.
Yes.
Usually what that ends up popping up. So if you are interested in figuring out what that happens to look like, let us know. We can certainly let you know. So there's also some income requirements, correct?
Yes. So there's an income limit for rural development. Again, it's not for first-time home buyers, but the whole purpose of rural development is to help those buyers who need help purchasing a house. So the income limit for a family of 1 to 4 is right under $120,000 per year. And for a family of 5+, it's right over $158,000. Now that's total household income, whether you're on the loan application or not. Here's a good example that I run into every once in a while. Let's say they're parents, they both work, and they have a 20-year-old adult child who lives at home. If that adult child has a job, then that
gets thrown into the
income mix. Yes. So you have to be cautious when it comes to that. And, again, your loan officer will be able to tell you what does and doesn't qualify from an income standpoint, because also something I've done in the past to help offset some income is if you have childcare expenses, like daycare specifically, that you can document, you may be able to deduct dollar for dollar daycare expense and income. That helps lower your income and bring you below the limit.
And get you guys to where it needs to be.
I've had that help RD work out for a lot of people also. Yeah.
So this typically probably happens with, either two lower income salaries or a higher one, and somebody works inside the home, without children that are at work. Correct.
Yeah, exactly. And again, you don't have to be a first-time home buyer, and you can use rural development again and again. It's not one of those products where, I've already used it, I can't use it again.
Well, that's awesome. So you can get that. And there's more homes out there than you think. Whenever it pops up, there's quite a few out there that are set up for rural development. And, no money down, not a bad little deal to be able to go in and pump out.
Yeah. And there's another good caveat to RD that I love. So let's say you're buying a house and the sales price is $150, but we get the appraisal and it appraises for $155. Provided your debt to income ratio qualifies and you want to, you can roll in the difference in closing costs. So you could potentially take $5,000 of your closing costs, roll it into the loan amount, and never have to readjust the purchase agreement or do an addendum. You don't have to involve the seller at all. It involves you and your loan officer, and that's it. And all we do is adjust the purchase price by that amount. And then that's, for example, $5,000 less you would bring to closing.
That certainly makes life so much easier. So the one thing to kind of look at, if we're going to turn around, whenever you go to sell, because my job is to be able to put you into the place and sell it at some point in the future, making sure that you're in an area that has a consistent appreciation for whenever it's time to sell, you've got the wiggle room to be able to go and do that.
Right.
I don't recommend this rural development loan for somebody that's going to be in a home for 12 months or 24 months. Maybe 36, you've got the ability to go and pop out and just kind of, and it doesn't necessarily mean that's like a one size fits all type of framework or rule, but you want to make sure you're in an area that appreciates really well. So that way you've got the leverage to be able to go and move forward whenever it's time to be able to do that. So if you have more questions about the loan, make sure you give Tracy a call at
337-257-9146.
And you got an idea of what the house would be worth, or need an idea of what it would be worth in the future, you give me a call on my personal cell, 337-658-5690. Thank you guys so much. We will see you next week.